All right. Welcome to the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. All right. Let's talk about the state of the market and our outlook for the week. All right. This is going to be something that we're going to be doing every Monday from now on. I have a certain set group of items that we're going to be focused on. So, whatever you see in this particular opening brief, that will be what you can get used to seeing at the opening of every week here, right? Let's start off with just a few bullet points here. Fear and greed index, we closed that last week back above 68. Right, and that was just a rapid shift over the past month. We had a low of 15 on the fear and greed, and now we are back above 68, looking at greed yet again. All right, now the breadth is also recovering. Nearly 60% of the S&P 500 is back above their 50-day moving average. That's coming well off of the recent lows, and that's something that we want to consider, in our assessment of the market this week. If we did start to see some downside in the market, which we're seeing a little bit of that this morning, consider that the market may not give up those 50-period moving averages so easily. And the other part that is important is going to look at crude oil prices this morning as well. All right, you look at this crude oil prices as well. You'll notice that crude oil prices have not gotten back above that $90 mark this morning. There, last I looked, they were trading at around $87 a barrel. That's well off of the highs, not far from the lows. So that's still very supportive of the current valuations in the market. The 10-year treasury was up 1 basis point last I looked as well. Again, not very, not creating much headwinds for the market. That doesn't mean that we're gonna, skyrocket into the week, but it does mean that it could limit the downside. All right, and that's until we get more word on what's going on in Iran. Next, we're talking, underlying value, right? Despite this rally that's happened, Morningstar data shows that the broader U.S. market remains approximately 16.2% undervalued based on constituents' fair value. Now, the reality there is that a lot of that undervaluation is coming from the tech sector, materials, energy, not as undervalued as the rest of the market. Utilities, not as undervalued as the rest of the market, but nonetheless, this still could continue to support that upside. I will point out that I noticed this morning consumer staples names that we traded last week were still up this morning, so that could create some upward, um, you know, could create some upward pressure on those trades. So, just watch out. Maybe some profit is coming your way this week, and you're gonna want to, take that and move out of the way, because I still think that when the tech sector is running, you may see some weakness in staples. Okay, that's because Staples has had a pretty decent run recently. Now, short-term, medium, and long-term indicators are all currently reading strong and bullish. All right, this is based on our bar chart market outlook. And so that's looking at moving averages and RSI, all these different indicators are mapped into that portal. So it's looking decent on that end. Now, so these are our key metrics that we're looking at. All right. Fear and greed over 68. Via Morningstar, 16.2% undervaluation in the market. And then our implied volatility is also relatively low. Ivy rank 20.5%. Now, I think the most important thing to really highlight here this week is when implied volatility is this low, that's an opportunity to hedge against your portfolio. Okay, it's an opportunity to hedge against your portfolio. You're finally seeing things come around to that side. So take advantage. Right, we picked up some TZA Thursday and Friday. Picked up some TZA. That is the short small caps, and that was a great idea because now small caps are the worst performing so far today, with whatever downside we are seeing, even though it's not been much. Right? Either way, that should be a buffer against whatever downside we have going on here. All right. So take advantage of that implied volatility. All right. On the other side of this, let's talk about the technicals and the options landscape. Let's look at some of these key levels, the expected move, the market positioning. All right. So here's what we have. So at this current moment, we have first resistance at 722.83. Okay. And you're going to want to write these levels down or take a snapshot of my screen right now while it's still here, because these are going to be your important levels this week. You're going to want to pay attention to these. Okay. So this is SPY and SPX. So your first resistance through first support, those are SPY numbers. Your SPX is down there. We'll talk a little bit about that. All right. So for the SPY this week, 722.83, that's your first point of resistance. That's your immediate upside target based on weekly pivots. So if the market did take off this week, you're going to look for 722.83 as the potential, next level up. So if you see like I look at it like this, right? So when you see the market hold certain key levels, when the market holds certain key levels and bounces, or you see certain patterns form in the market, then break out, then typically you look at that and say, okay, well, that's a suggestion that we're headed to the next level higher, right? We'll talk more about that. Current price at the close on Friday was 710.14. Right, you have a bullish posture trading above the 20, the 50, and the 100 SMAs. Your weekly pivot was 699.70 at the close of last week. All right, so you stay above this level, then your bulls are still in control. So you look for that level to hold this week if you want to, stay on the bullish side of things. That level breaks, okay, and if it closes below that, with confirmation, what I would say to use for confirmation is a close below that level, and then look for the market to set a new low from there, and that's going to be your indication that you're headed towards 687.02. If the market breaks down further from where it's at right now. All right. Now, our gamma wall this week, and to explain gamma for you guys and what the gamma wall is, it's essentially gamma exposure, right? You're looking at market maker exposure, like what are they exposed to? All right. So we have 7,025 on the SPX or S&P 500. So that at this moment, right, could act as more of a spring to the downside, right? If you do break that level considerably, and like I said, so you want to look for the market to break that level and confirm that break by setting a new low. That is when I would consider that we're headed to some of these lower levels from there. All right. But still, nonetheless, let's keep this in mind, right? Lowest SP 500 target towards the end of the year, 7,000. Okay. Current level at the close on Friday was 7,126. Okay. Wall Street's average price target for the SP 500 by the end of the year is 7,459. Right. And the highest target is from Deutsche Bank with 8,000, even being that price target. So the average forecast roughly 4.6% upside from the current level by the year's end. Okay. So we still have potentially another 5% to the upside. So, you wanna keep that in mind. All right. Now let's talk about some of our key catalysts. Mainly we're gonna focus on earnings. All right. Let's see what we have here. So not much is going today, but on Tuesday we have GE, Raytheon, United Health. That's going to report before the market opens. After the market closes, we're going to have Tesla, right, which takes the spotlight alongside Texas Instruments. On Wednesday, we have Boeing and AT&T reporting before the market open. But after the market closes, yes, Lord, we have IBM Lam Research. And I don't know about y'all, but I'm thugging it out on ServiceNow. We're gonna let her rock. Okay. Um, on Thursday, we have American Express, Lockheed Martin before the market opens. After the market closes, we have Intel and SAP. Lastly, on Friday, Procter and Gamble, Schlumberger, and HCA reporting. This is HCA Healthcare reporting before the market opens, and that's going to close out our week right there. All right. So we do have some expectation of volatility. And obviously you want to keep your eyes peeled on the implied moves for the market, because that could be a very, very you know, rocky start to the week and could create implications for the rest of the week with what we have going on here. All right. Now let's get ready for the open. All right, let's get to the live charts. We'll take everything from there. All right.